Social Security Made Easy is a production of the Retirement Workshop. The purpose is to improve your understanding of how Social Security works so you can make more informed decisions when you select your benefit options. This short video will explain who is eligible for Social Security benefits and how benefits are actually calculated. At the end of the video, we will offer you the opportunity to obtain our detailed report entitled Making Social Security Easy. This material is designed to provide general information. It's not intended to provide specific legal or tax advice and cannot be used to avoid tax penalties or to promote, market, or recommend any tax plan or arrangement. Please note that Retirement Workshop representatives or employees do not give tax or legal advice. You're encouraged to consult your tax advisor or attorney. Clients should also seek guidance from the Social Security Administration regarding their particular situation. If you are a U.S. citizen, then you're probably eligible for benefits as applies to over 95% of us. The benefit you receive will depend on how much you earned and paid in Social Security taxes during your working career and the age at which you apply for benefits. To be eligible for Social Security retirement benefits, you must have worked in a job for at least 10 years where Social Security taxes were paid. Social Security uses the highest 35 years of income in their benefits calculation. So if you work less than 35 years, they insert a value of 0 for every year less than 35. So working less than 35 years will mean a lower benefit amount and may be a reason to continue working longer before you actually retire. A person is also eligible for benefits if they were married to a worker who is eligible. Even if you never worked yourself, you may be eligible for spousal benefits. If you are divorced from a worker who qualifies for benefits, you may also be eligible for benefits depending on how long the marriage lasted. If your spouse or ex-spouse died and they qualify for benefits, then you might be eligible for survivor benefits, again, depending on how long the marriage lasted. To make the actual benefit calculation, Social Security uses only the highest 35 years of earnings. To account for inflation, they index these numbers and divide by 420, which is the number of months in 35 years. The objective is to calculate the average index monthly earnings. Once they arrive at this average, it is subjected to 3 Ben points, which are added together to determine the monthly benefit the person would receive at their full retirement age. More about full retirement age in a minute. This monthly benefit is increased each year by an annual cost of living adjustment percentage declared each year by the government. Here's an example of how the calculation is done. Our baby boomer was born in 1949, so their full retirement age is 66. They paid Social Security taxes since they were in their 20s, and based on their earning history, indexed for inflation, their average index monthly earnings number is calculated at $8,152. This number is then subjected to 3 Ben points set by Congress. The first $791 is paid at 90%. The next $3,977 is paid at 32%, and the remaining amount is paid at 15%, which if you look closely is a great example of the redistribution of wealth principle. The sum of these 3 products is $2,492.14. The 14 cents is rounded down, so the monthly benefit our boomer qualifies for at their full retirement age of 66 is calculated to be $2,492 a month. The full retirement age is based upon the year of birth. So if you were born in 1952, your full retirement age is 66. If born in 1957, your full retirement age is 66 and 6 months. If you were born in 1960 or later, the full retirement age is 67. Make a note of your full retirement age as it's an important variable to consider when understanding your benefit options. A person may apply for benefits as early as age 62, age 60 if they're disabled. However, applying for benefits before reaching full retirement age will reduce the benefit amount. The rationale is simple. The government considers us all to have the same life expectancy. If one person begins benefits at age 62, they receive payments 4 years longer than the person who begins taking benefits at age 66. Therefore, the reduction at age 62 is 25% of the benefit available at your full retirement age. The longer you wait until full retirement age, the lower the benefit percentage reduction. Once you reach your full retirement age, you're eligible for 100% of your benefit. Waiting to apply until after your full retirement age increases the benefit by 8% for every year you delay taking benefits up to age 70. If your full retirement age is 66, for example, and you wait until age 70 to take benefits, they're increased 8% per year, or a total of 132% higher. This is the minimum increase, as your actual benefit will also include any cost of living adjustments applicable during the same time frame. Applying early reduces the benefit, and delaying will increase your benefit. Here are two examples. The retirement age and the benefit amount is the same for each. The first applies early at age 62, so their benefit is calculated at $1,500 a month. The second delays taking benefits to age 70, so their benefit begins at least $2,640 a month. An important point to remember is a lower benefit will be lower for life, while a higher benefit will always be higher. The annual cost of living adjustments will have an impact on one's total benefits received. The cost of living adjustment is an annual percentage, and so it produces a larger marginal increase based upon a higher base amount. The good news is you don't need to make the benefit calculation yourself. Most of this information is contained on the Social Security website. To access your benefit statement or your history of earnings, go to www.socialsecurity.gov/state. Once you have entered your Social Security number and set up your account, you will be able to see your employment income history and the monthly benefit amount for full retirement age and the estimated benefit amount available to you at age 70. Or you can go to www.socialsecurity.gov and log into the Benefit Estimator to plug in future estimated income values and estimate your benefits if you continue to work. There are a number of considerations when deciding when to take Social Security benefits. If you need the money, it's pretty simple. You take it sooner. If you have health issues, do not have a long life expectancy, it may also be better to start taking your benefits sooner. If you're married, is it likely your spouse will outlive you? If so, then make this part of your plan. Understand the longer a person lives, the more money they will receive by delaying taking Social Security. If you take benefits before your full retirement age and you are working, the annual earnings test may reduce the benefits you receive in that year. If you work and begin taking benefits before your full retirement age, then some of your Social Security benefit may be withheld from you. Before your full retirement age, working triggers the annual earnings test. $1 of benefit is withheld for every $2 you earn above a stated amount. The stated amount for 2014 is $15,480. So if this applies to you and you earn, say, $45,480, then $15,000 of Social Security benefit would be withheld from you that year. If you've reached the age of full retirement and you're still working, $1 in benefits will be withheld for every $3 you earn over the amount of $41,400. Your benefit is adjusted again at full retirement age. But since you have also a permanent discount because you took early benefits, it's normally appropriate, if you will continue to work, to wait until at least full retirement age before beginning taking your benefit. The windfall elimination provision affects anyone who earns Social Security benefits in a job and also qualifies for a pension from working in a job where Social Security taxes were not withheld. For example, a government employee who's receiving a pension. The actual Social Security benefit may be lower than what is being reported to you. The windfall elimination provision reduction occurs when the person applies for benefits. Survivor benefits are exempt, but spousal benefits are not. Reduction cannot be more than 1/2 of the pension amount. See the Social Security website for the calculation or contact your local Social Security Administration office. If you are watching this video, then you probably are a Social Security beneficiary. By selecting a strategy to maximize your Social Security benefits, you have created the foundation for a solid retirement income plan. Social Security provides an inflation-adjusted income guaranteed to last as long as you live. The next step in the planning process is to coordinate your other retirement assets, such as pensions, retirement savings, personal savings, annuities, and factor in if you intend to continue working either full or part-time. Now you know how Social Security calculates your benefits. This is one of many videos Retirement Workshop created so you could become better educated about Social Security. We created this series of easy-to-digest videos so you can either go right to the area of greatest interest for you or view them all and gain a full understanding. Our objective was to provide an easy-to-use format to learn what you need to know to make an informed decision. If you'd like to have a complimentary copy of our full report about making Social Security easy, simply log on to the following website and request your copy. Thanks for joining us. We appreciate any comments you'd care to make. If you like what we have done here and are pleased with the content, please tell a friend. We appreciate the opportunity to be of service.